Hello Rockstars, welcome back to our CA Final SCMPE revision. We are discussing the chapter decision making. We've looked at the first concept and all the questions. First, we've looked at the basics of marginal costing. We've looked at the basic formulas. We've also looked at relevant costing as a technique, and we've solved all questions from study material. Now we are moving forward to the second concept, and the second concept will be, yes, the second concept is the various short-term decisions to be taken. So we'll be taking various short-term decisions based on the concept of relevant costing, based on the concept of marginal costing. Again, the base will be same throughout. What we are going to do, we are going to look at the marginal cost, compare it with marginal revenue. Marginal revenue is higher, we accept the decision. Marginal revenue is less, we do not accept. Simple. Remember the golden rules throughout. It's the same thing we are going to do. We'll compare the marginal revenue with the marginal cost. Accordingly, we will take the decision. Again, if we have more than one alternatives, we have more than one options, we need to select any one of those. Which one do we select? From the perspective of profit, what a business organization wants, it wants the profit to be maximum. So we will select that alternative which gives us the maximum contribution on total basis. Again, if you're looking at it from the perspective of cost, cost should be minimum. The relevant cost should be minimum. Whichever is that alternative wherein the relevant cost is minimum, that is what we are going to choose. Again, in addition to that, every time while we are choosing a decision, it is not just the financial side, we also have a non-financial factor to be considered. Only then we'll be taking a decision. So we need to consider non-financial factors as well when we are taking the decision. Yes, simple, do not complicate the things. Go by the logics, you'll be in a position to solve everything. So let us begin with the first decision, that is sell or further process decision. So what decision we are going to take? Should we sell the goods as it is or should we further process the goods? How do we take a decision? Let us again try to understand it with the help of short, small and sweet examples. Suppose we are Raymond's. So what is the Raymond's business, students? Raymond's is in garments industry. Initially, they began by manufacturing fabrics. Yes or no? So they were manufacturing fabrics, selling the fabrics. So initially they were selling the fabrics, assume at 1,000 rupees. So at present they are selling the fabrics at 1,000 rupees. So now they have a business proposal. So they are thinking, should we sell the fabrics as it is or should we make a shirt out of it and sell it? So at present, what we have? We are having the fabrics. Fabrics we are selling it 1,000 rupees. Now the decision what we are trying to take is, should we sell the fabric as it is or should we further process it, stitch it, make it into a shirt and then sell it? How do we take a decision? Let us try to see. Now, if we are selling the fabric, how much we are getting? Yes, for 2 meter fabric, we are selling it at 1,000 rupees. If we sell it as a shirt, we have to incur certain additional cost. Again, if we are selling it as a shirt, we'll be getting certain additional revenue as well. So, company is deciding if we are selling it as a shirt, the revenue, the selling price will be 2,000 rupees. So, how much extra revenue we are getting, students? How much extra revenue we are getting? Tell me, students. As a fabric, we are selling it at 1,000 rupees. As a shirt, we are selling it at 2,000 rupees. How much extra revenue we are getting? How much extra revenue we are getting, students? Tell me. 1,000 rupees is the extra revenue we are getting. So if we convert it into a shirt, 1,000 rupees extra revenue we get. Now we'll see if we convert into a shirt, how much extra cost we are incurring. So we see we will be getting extra 1,000. So how much extra cost we should incur? We want additional material of, say for example, 100 rupees. The additional labor we want, tailor for stitching we want of 300 rupees. Again, a machine we want whose depreciation is 200 rupees. So specifically, how much extra cost will be incurring? 100 plus 300, 400 plus 200, 600 rupees. So what is going to happen? If we further process, additional revenue we get it's 1,000 rupees. If we further process, additional cost will be incurring is 600 rupees. So what is the decision, students? Should we further process or should we not? What is the decision? Tell me in the comment section. Yes, should we further process? Should we not? What should we do, students? Yes. So the decision is we will further process, because if we further process the goods, we will get an extra profit of 400 rupees. Yes or no? We further process, extra 1000 rupees revenue get. If we decide to further process, extra 600 cost will incur. So extra 400 profit we will be earning. This is how decision is taken on sell or further process. So what is it that we are going to do? Yes. Firstly, we see what is the incremental revenue we get by further processing. How much extra revenue we will get if we further process the goods. Yes, in our example, 1000 rupees extra we got. This we compare with the incremental cost. How much extra cost we should incur to further process the goods. Now we compare. If incremental revenue is more, the revenue is more, we accept. If cost is more, we do not accept. Simple. How do we get incremental revenue from further processing? How much extra revenue we are getting? It is revenue after further processing minus revenue before further processing. We are telling, yes, after further processing, we are getting 2000 rupees. Before further processing, we were getting 1000 rupees. So extra revenue we are getting is 1000 rupees. And what is the incremental cost? Incremental cost, relevant cost. What all do we have in relevant cost, students? Everywhere. What is relevant? Variable cost will be relevant because it is incurred for that decision. If we have any specific fixed cost, suppose we are telling, yes, if you want to manufacture a shirt, we have to purchase a machine. For that specifically fixed cost we are incurring. So that is also relevant. It is incurred only if we take the decision. Is the additional fixed cost, specific fixed cost, and opportunity cost, if any. Always relevant cost will be three: variable cost, specific fixed cost, opportunity. Variable cost, specific fixed cost, opportunity. We are telling to manufacture a shirt, variable cost. We want thread, we want labor, for them we are paying the variable cost. Specific fixed cost. Additionally, we are buying a new machine only for manufacturing a shirt. And opportunity cost. Suppose there was a shortage of labor. So the employees who are manufacturing some other product, we call them here. So whatever is the opportunity cost, that should also be included. And one more thing, joint cost or cost up to split off are sunk cost and hence are irrelevant for decision. What is the joint cost? We are telling, yes, we are looking at the decision. Here we are. Yes. So yes, it generally comes in case of joint product by product. This is the split off stage. This is the further processing stage. So at till split off stage, we would have incurred certain costs. Say for example, 10 lakh rupees we have incurred here. What is this? This is sunk cost. This is incurred in the past. So now whether I further process, I don't process it further. This cost is already incurred. So it is irrelevant for decision making. It is irrelevant, students. Is it clear? So simple, sell or further process. I see how much extra revenue I get if I further process, how much extra cost I should incur if I further process. Compare and then take a decision. Here we have a small example here. A company produces two products, X and Y, from a joint process. Company wants to take a decision whether it should sell the goods as it is or it should further process the goods. Kindly advise. So we have two products, X and Y. Joint process cost is given. Yes, joint process cost before split off, whatever is the cost you have incurred. We have told it is historic cost, sunk cost is irrelevant. Whether we further process, we don't process it further. This cost is anyways incurred. Now, sale at split off, X is 50,000, Y is 1 lakh. Sale value after split off, X is 1,10,000, Y is 1,20,000. So, how much extra revenue we'll be getting if we further process? We are telling for X, if we select split off, we get 50,000. If further process, we'll be getting 1,10,000. So, how much extra revenue we'll be getting? 1,10,000 minus 50,000, 60,000 for X, 1,25,000 minus 1,25,000 rupees for Y. This is the extra revenue. And to earn this extra revenue, how much cost we are incurring? For X, we are incurring a cost of 40,000 rupees. For Y, we are incurring a cost of 30,000. So what is the decision we are taking? Look at this. For X, if we further process, we'll be getting an additional revenue of 60,000. And to get this revenue, we'll be incurring a cost of 40,000. We'll tell, fair enough, we'll still be getting an incremental profit of 20,000. But for Y, look at this. If we further process, extra revenue we'll be getting is only 25,000. But to get this extra revenue, extra cost we should incur is 30,000. So cost is more, so we'll tell let us not further proceed. So what is the decision we are going to take? For X, we'll tell let us further process the goods. For Y, we'll tell we'll sell the goods as it is. Is it clear, students? The next decision that we have is a special price order decision. Special price. We are selling something. Yes, generally we are selling it at a different price. But for this specific customer, we are planning to give it at a special price. How do we take a decision? Again, let us try to understand it with the help of a small example. Suppose we have a wedding hall. Okay, so we have a wedding hall, we give it for weddings. Generally, we'll be charging 50,000 rupees. So, generally, from all the people who come for marriage, we'll be charging 50,000 rupees. So, this is us. This is a government school teacher and few students. So, what happened is a government school approached us telling that they have an annual students meet next week, next Tuesday. They're telling next Tuesday we have an annual fest. Can we host it here? Yes, we want to make it a big event. So we tell, yes, we are charging 50,000 for the general public. Yes, but again we think, yes, firstly, it is not the same customer. Yes or no? 50,000 we are charging for people who come for weddings. This is just a government school. It's the first thing that goes in our mind. Second thing is, it is Tuesday. Yes or no? Tuesday, anyways, weddings will not happen. So anyways, the hall will be free. So how much ever is the money we are getting, it will be a profit. So what they are telling is, yes, we are a government school, we don't have much fund, but 20,000 rupees is available with us. So can you make it available at 20,000? Oh, if I accept this special price order, how much revenue I'll get? 20,000 is what I'll be getting. I'll see what all cost I should incur, what all relevant cost I will be incurring. What all relevant cost? It is variable cost, specific fixed cost, and opportunity cost. I see. What all variable cost I should incur? Yes, material, nothing. Security guard and cleaning. Yes, if we have a function that day, I need to call a security guard for that day. For that, I have to pay 1,000 rupees. And for electricity for that particular day, say I'm incurring 4,000 rupees. So 5,000 is the variable cost I'm incurring. Specific fixed cost, nothing as such, because whatever is there, all the depreciation, other thing, it is just the generic overheads. Only will only allocate that. Specifically, nothing is incurred just for government students. And opportunity cost, because it was Tuesday, there was no other function, there is no opportunity. What we are thinking, see, if we accept this special price order, we will get 20,000. Yes, to incur this, okay, to fulfill the special price order, how much cost we should incur? 5,000. We'll tell, okay, still we'll be ending up with a profit of 15,000. So we can accept this. So we will accept the special price order at the rate 20,000 rupees. Is it clear, students? So how do we take a decision? Yes, we compare what is the relevant revenue we are getting from a special price order. How much revenue we are getting from a special price order decision. As against that, we see what is the cost of the special price order decision. If revenue is more than the cost, we accept. If revenue is less, cost is more, we will not accept. Clear? Yes. And what is the relevant cost of special price order? We have told throughout what all cost is relevant. It is variable cost, if there is any specific fixed cost, and if there is any opportunity cost. These are the cost which is relevant. So based on that, we will be taking a decision. Now, some other points which has to be kept in mind. Firstly, what are all the cases wherein a special price order can be quoted? When all can we take a special price order? Yes, suppose in the same case for hall, okay, today one customer came, yes, I've quoted 50,000 rupees for wedding. Tomorrow other customer came for wedding, I'm telling 30,000. After tomorrow other customer came, I'm telling 10,000. Is it acceptable? No. Yes, all customers will come and start fighting. Yes, what are you doing? Yes or no? So when can we accept a special price order? Only in two cases. Either in case of a non-competing customer in the same market. Suppose same market, but it is a non-competing customer. Suppose I'm telling you same in the same locality. Yes, 50,000 I'm charging for wedding. This is a government school, so I can charge a different price. That is one case. Or else from a potential customer in a new market. Suppose I am telling, yes, I am going to a new market. Suppose I am selling this pen. Okay, everywhere in India, I am selling it at 200 rupees. But I am planning to export. It is a new market. I can sell it at 100 rupees because it is a different market altogether. Clear? So special price order, special price can be quoted only in two cases. If it is in the same market, it should be a non-competing customer, or else it should be a customer in a new market. Only then we can quote a special price order. Yes. Next, other factors which are to be considered while we accept the special price order decision. Yes, what are the other factors we need to consider while we accept the special price order decision? We have 4 points. Yes. So here we have the mnemonic I love abs. Okay. Short mnemonic. What are the other factors which has to be considered while accepting a special price order? I love abs. I for industry analysis, A for additional terms, B for buyer creditworthiness, and S for statutory compliance. Now, what is it? Yes, why we are looking, how we are looking. Always for any decision along with the financial, non-financial factors we need to see. Now for special price order, generally we'll be accepting special price order from a foreign market. Yes or no? Suppose I am telling this price, this pen, I am selling it in local market for 200 rupees from a foreign market. A customer is asking, yes, can you give it to me at 100 rupees? I am thinking till now I was selling only in the local market. Now I can go international. Yes, I can be an international company. So we plan to sell it at a special price. Now, what all things I need to keep in mind when I'm selling it at a special price to a foreign customer? Firstly, I need to keep in mind the industry analysis. Yes, the industry. Yes, I'm selling it to a foreign market. How is the industry there? I need to assess the competition. Whether the competition is strong, the competition is weak. Can I enter in there? Or is it difficult for me to make an entry? I need to have an assessment of the current and the future demand. Yes, how much is the demand for these pens? At present, how much is there? In future, how much it will be there? Because if it is a saturated market, then there is no point. But if it is an emerging market, I can go there and make an impact. Yes. How can I make an analysis of the industry? How can I get to know whether the industry is good or not? Is it feasible for me to enter or not? Yes, we have Porter's 5 force model, we have pestle analysis, we have SWOT analysis. We will be discussing this in other chapters. Porter's 5 force model, pestle analysis, SWOT analysis. Based on this, we'll be having an analysis into the industry to see if the industry is attractive or not. If it is attractive, only then we'll enter. Otherwise, there is no point entering. Yes, giving it at a special price. That is the first term. Yes, I for industry analysis. Next, I love apps. A is the additional terms. So generally, when we are exporting the goods, yes, we'll be having our agreement under which we are exporting the goods. We need to see whether all the terms which are provided, are they clear and do they suit the business requirement? There should be no vague terms. There should be no terms which could bring in a possible complication in the future. So this is the additional terms. Yes, now we are selling it at a very small price, at our marginal cost only. But there is any term which could bring us huge penalty complications in the future, then it is not feasible at all. So we'll see, yes, whether all the additional terms, are they clear and do they suit the business purpose is the first thing. And again, we need to check if there is any late delivery penalty in all the terms, the agreement will see, yes, whether there is any late delivery penalty. If so, we should see if we are in a position to deliver it on time, or else we'll be under trouble. And again, we need to see, because we are exporting, are there any foreign bank charges? If yes, all these costs should be considered. Only then we need to quote a price for the special price order. So I love AMS. I is for industry analysis, A is for additional terms, B is for buyer creditworthiness, and S is for statutory compliance. Buyer creditworthiness. So no, we are selling it to a new market. We don't know the customer. We don't know if he is creditworthy or not. We don't know if he will make us the payment or not. So what we need to do? We have a fear. We are selling the goods. Will we get money or not? Firstly, we need to carry out a credit check of the buyer to see if the buyer is creditworthy or not. Or else we have sold the goods, we are not getting the money. What is the use? No point at all. So we need to carry out a credit check of the buyer. We need to try and reduce the risk of non-payment. What is the risk we are having? We are selling the goods, we are not getting the payment. How can we reduce the risk? Three ways. Either we tell 100% advance you give. Yes, we'll give it at a small price, but give me the entire amount in advance. One way. Or else obtain letter of credit from that party. Yes, obtain letter of credit so that you have a surety that you will be getting the amount. Or third thing, opt for post shipment insurance. There is something called as post shipment insurance for export. Once we have shipped the goods, if you don't get the money, yes, we'll be recovering it from the insurance company. Post shipment insurance can also be opted. So we need to see the credit worthiness of buyer, and how do we reduce this? Either 100% advance, letter of credit, or post shipment insurance. Fourthly, we need to comply with the statutory compliances. We are selling it to another country. What are all the laws and regulations there? Have we fulfilled all those laws and regulations? If not, what will be the implications? What will be the penalty? All those things has to be considered before we accept the special price order. We need to comply with the foreign laws. We need to see if we have complied or not. Export documentation. What all export we are doing? Complete documentation has to be maintained. The complete flow, so that if at all at any particular point of time there is any complication, we have the complete documentation telling what we have done, how we have done, at what price we have done. And again, we need to also keep in mind how much is the penalty for non-compliance. If we have not complied any rule of abroad, how much penalty will be incurred? All these factors should be determined, should be kept in mind before accepting a special price order. Should not randomly accept the special price order just based on financial factors. These non-financial factors also have to be kept in mind. What are the non-financial factors, students? Tell me the non-financial factors. What is the mnemonic? Yes, I love. What do we love? I love abs. So no, we all love abs, but none of us have abs. Yes, I love abs. I is industry analysis. A is the additional terms. B is the buyer credit worthiness. And S is the statutory compliance. Is it clear, students? So, short-term decisions. Let us have a look at the questions. Yes, sell or further process decisions. There are no questions, no illustrations, no test your knowledge questions also. Special price order decision. Okay. Illustration, there are no questions, but test your knowledge, we have question number 10. So we have question number 10 of test your knowledge. Question number 10, page 5.42. Let's have a look at question number 10, page 5.42. Advise whether it is worth accepting at 28.5 considering the other factors. Yes, something is there. N2 company is manufacturer and supplier of firefighting equipments. It follows international quality, uses high grade raw material. Okay, we are a company. It is fast growing brand. Okay. N2 has been offered a bid on a prospective export contract for 20,000 commercial fire extinguishers. Yes, what has happened? Yes, we got an export order. We are getting an export order. Delivery terms is FOB, free on board. What is the terms they have told? 2-gallon cylinder holding 10 pounds of multi-purpose dry chemical at 380 psi. That is the description. What is the material that we want? N2 is exporting for the first time. We are exporting for the first time. So can we quote a special price order? Yes, we are entering a new market. So we can quote a special price order. The price computation per fire extinguisher is as follows. Per fire extinguisher. For one fire extinguisher, these calculations, all these calculations is for one fire extinguisher. Like this, how many fire extinguishers we want? 20,000. So what all they have given? Let us look at the calculation, what we have done. We have first calculated what all cost we have incurred. We are telling direct material. Yes, direct material, all these material we are incurring. Yes, the cost is 1,500 rupees. Yes, to manufacture a fire extinguisher, we are incurring this. Next, direct labor. Yes, we are incurring 80 rupees direct labor. Leakage testing. Yes, we have produced that. We need to test if there is a leakage or not. For that, we will be incurring 50 rupees. Again, specifically for this. Variable overhead, 214 rupees. Export clearance charges. For every item, export clearance will be incurring 36 rupees. Now, fixed overhead of 100 rupees. Whether fixed overhead is relevant to students. Till now, whatever cost we had, all these cost was variable cost. Yes or no? Material variable cost. Yes, labor was also variable cost. Leakage testing was also specifically incurred. Variable overhead, export clearance. All of that was variable cost. But what is this fixed overhead? This is just allocated overhead cost. This is just an allocation. Yes, so this is just an allocation of the cost. So it is irrelevant for decision making. Okay, fixed cost. Yes, it is just the allocated cost. It is not specifically incurred. We are selling other goods also. So while we are selling the other goods, whatever is the common fixed cost, we are distributing here also. So this is irrelevant. So what all cost is relevant, students? Material cost of 1500 is relevant. So first let us write down. Yes, material cost. We have 1500 rupees, which is relevant. Next, direct labor cost. Nothing is given. We'll assume 80 rupees. We are specifically incurring. It is irrelevant. Next, leakage testing, 50 rupees. We'll assume it is relevant. Next, variable overheads, 214. Specifically incurring. Relevant. Export clearance, 36. For every unit, to get the clearance, we have to incur 36 rupees. But fixed overheads is irrelevant, students. So how much is the total cost? Tell me, students, what is the total cost? 1880. Perfect. The total cost is 1880. Now let us see what question is telling. So we had added 100 rupees also. So our total cost came to 1980. Yes, we told we want a 10% markup. So we have quoted a price of 2178 rupees. So we have told, yes, we should get 2178. Because we are exporting to US, we have to quote in terms of dollars. We convert into dollars. Yes, $1 is equal to 67 rupees. So we tell $32.51. This is what we have quoted. N2 has quoted $32.51. But what customer is willing to pay? Customer is telling, if you give it to me at 28.5, I will accept. Otherwise, Tata bye-bye. We need to see whether we should accept at $28.5. So how do we see? It is a special price order. So we'll see if we accept how much revenue we'll be getting, $28.5. If we accept how much relevant cost will be incurring, we will see. We will compare. If relevant price is more, we will accept. Relevant cost is more, we will not accept. So look at what we are trying to tell. We are telling yes, total cost, relevant cost is 1880. Now we need to convert this in terms of dollars. So how do we convert it into dollars, students? Yes, USD to INR conversion is 67 rupees. Yes, what does it mean? $1 is equal to 67 rupees. We want to calculate 1880 rupees is how much dollars? So we'll tell it is 1880 divided by 67. How much is it, students? Is it $28.06? Yes. So to manufacture one unit, the cost will be incurring is $28.06. Yes. If we sell one unit, the revenue will be getting is $28.5. We'll tell, yes, it is a good deal. Yes or no? So we are telling profit or loss on acceptance of order. If we accept the order, how much revenue will be getting? 28.5. To fulfill the order, how much cost we should be incurring? $28.06 for one extinguisher. 28.5 minus 28.06. On every extinguisher, we'll be earning $0.44. Like this, how many extinguishers we have? I guess we have 20,000 extinguishers. Yes, 20,000 extinguishers we have. So how much profit we will be earning? We will be earning a profit of $8,800 if we accept the special price order. Yes or no? So we'll tell, even though the customer is telling 28.5, let us accept because it is we are entering a new market. The relevant cost is only $28.06. So on every extinguisher, we are earning $0.44. So totally we'll be earning $8,800. If you want, you can convert it into rupees as well. $1 is equal to 67 rupees. So $8,800 is equal to how much rupees? So 8,800 into 67, it comes to rupees 5,89,600 rupees. Okay, there may be a small rounding of error because we have rounded off here. So total profit which we will be earning if we accept is 5,89,600. So what is the decision, students? Should we accept the special price order or should we not accept, students? Tell me, what should we do? Yes, let us accept. So we will accept. We'll tell, okay, let us do it. So what is the question asking? Question is asking advise. Yes or no? Question is not asking calculate. Question is telling advise, 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 advise. We should not just tell financial, we should tell non-financial things also. So firstly, advise, we'll tell financial factors. Based on financial front, we should accept it, because if we accept it, we'll be earning an additional profit of $8,800 or 5.89 lakh. So from a financial perspective, we will accept the special price order. But from a non-financial perspective, for a special price order, what is the thing that we need to keep in mind? I love abs. Yes or no? Industry analysis. We are selling. We need to analyze the industry. How is the export market? Do we have any future there? What is the present demand? What is the future demand? Yes, we need to see how is the demand supply. If demand is more, supply is less. Yes, it is good to enter the market. But if demand is less, supply is more, there is no point entering the market. How do we make industry analysis? Porter's 5-4 model, pestle analysis, SWOT analysis. Next, additional terms. We need to see if the terms are clear and suit the business requirement. We need to see for export, whether the customer is charging any late delivery penalty. We need to see if we have to incur any foreign bank charges. We need to look at the buyer credit worthiness. We need to see, make an evaluation of the credit worthiness of the buyer. And how can we reduce the risk? Either take 100% advance, ask for letter of credit, or opt for post-shipment insurance. And we also need to look at the statutory compliances. Statutory compliances, yes, whether we will be in a position to comply all the foreign laws, whether export documentation is correctly maintained, what is the penalty if at all there is any non-compliance. So advice, every advice we need to say, from financial, what is it? Non-financial, what is it? And overall, we need to be diplomatic, telling that yes, we need to consider from a financial perspective, it is acceptable, but we need to consider non-financial factors as well while we take a decision. Those non-financial factors, even though they do not contribute to profit in the short term, they contribute to sustainability and profitability in the long term. This is how we analyze. Look at this. First, we have calculated, we have told total benefit is $8,800. Advice, from a financial perspective, profitable to accept. Besides this, other factors which has to be considered: statutory compliance, buyer credit worthiness, industry analysis, as well as additional terms. I love apps. Yes or no? Statutory compliance, we need to tell yes, foreign laws. Okay. We need to look at the export documentation. Okay. Yes, if compliance is not met, what is the consequences? What is the penalty? 3 points. Buyer credit worthiness, carry out credit check to see if he is paying or not. Yes. We have a risk. How can we reduce the risk? Either letter of credit, 100% advance, or post shipment insurance. Industry analysis, assess the competition. How strong is the competition? Interplay of supply and demand. Okay. Next, current and future demand. Okay. Yes. How can we perform industry analysis? Through 3 main ways: Porter's 5-4 model, pestle analysis, SWOT analysis. Additional terms should be clear and suit the business. Okay. Firstly, we need to see if there is any late delivery penalty. Yes, whether we need to see if there is any foreign bank charges. Other things also have to be, yes, foreign bank charges. Yes. Next, overall, should accept the contract only after considering all these factors. This is how we answer. Yes, 10-mark question. Is it clear, students? Should we continue to the next area? Yes, based on it, we give the overall conclusion. Next, third and an important area that we have is product mix decisions. That is, how do we look at the product mix if we have limiting factor? Yes, this we would have already done in our CA Inter. Again, we'll try to explain it to you guys. Product mix decision. Again, yes, every concept, let us understand it with small stories. Suppose, yes, while studying, okay, I was with my friend whose name is boss. Okay, I call him my boss. Okay, so this is my boss, this is me. Okay, yes, I was always concerned, I need to become a CA, I need to study, become a CA. Yes, he had sole goal in his life. What is it? Save water, drink beer. Yes or no? Throughout 24/7, Yes, the only thing he was thinking was of beer. Yes, after I graduate, I need to start my own wine shop. Yes, this is what was there in his mind. So what happened? He graduated, he started his own wine shop. Okay, so here he is enjoying his life. So now, what happened after COVID? The labor hours was in shortage. Yes, employees were in shortage. So he was manufacturing all these things, but labor hours was in shortage. So now he is thinking he has two products which he generally manufactures. He manufactures wine, he manufactures vodka. Now he is thinking, which one should I produce? Should I produce wine? Should I produce vodka? Yes, again, not for drinking purpose, but for selling purpose. So how do we take a decision? Sound decision. Wherever profit is maximum, that is what we will choose. Now look at the data here. We have wine, we have vodka. Selling price, assume, I don't know the actual figures, I've just put random numbers. Yes, wine, suppose selling price is 200. Suppose the variable cost is 80. Contribution from wine is 1. Vodka, suppose the selling price is 300, variable cost is 150, contribution per unit is 150 rupees. Based on this, which one should we produce, students? Should we produce wine? Should we produce vodka? Which is more profitable? If you have to produce any one, which one should you produce? Wine or vodka? Which is more profitable, students? Tell me. Yes. Everybody is telling vodka because the contribution is 150 rupees per unit, not because it is tasty. Okay. Yes. This is still here. Now I give you an additional data. Suppose I am telling labor hours is in shortage. Suppose I am telling to manufacture wine, 1 hour of labor is sufficient. But to manufacture vodka, 2 hours of labor is required. So how do we take a decision? If there is any factor which is a limiting factor, which is in short supply, okay, then we don't take a decision based on contribution per unit. We take a decision based on contribution per limiting factor. Yes, we'll tell. To manufacture wine, our employee has to work for 1 hour. If he works for 1 hour, we'll be getting 120 rupees. So for 1 hour, if our employee works for 1 hour, what is the contribution? 120 rupees. For vodka, look at this. Yes, by selling one vodka, we'll be getting 150 rupees, no doubt. But to manufacture one vodka, our employee has to work for 2 hours. That is, I can tell if my employee works for 1 hour, he is effectively getting 75 rupees. Now, which is higher, students? Wine or vodka? What will be the decision? Yes, now which one do we choose, students? Yes, wine we will choose. Suppose I am telling altogether we have only one employee who can work for 10 hours in a day. Yes, to manufacture one wine, 1 hour is required. So how many wine he can manufacture? 10 wine he can manufacture. Yes, by selling every wine, we will get 120 rupees. So if we sell 10 wine, we will be getting 1,002. Yes. To manufacture one vodka, 2 hours is required. So in 10 hours, we'll be in a position to manufacture 5 vodka. 5 vodka, by selling every vodka, we get 150 rupees. So 150 into 5, 750. So this is having a higher contribution. This has to be given a priority if labor hours is a limiting factor. So we got to know that if any factor is a limiting factor, then decision should be based on contribution per limiting factor. Is it clear, students? Yes, write it down, everyone. Yes, write it down in the chat. You should not forget. If any factor is a limiting factor, decision should be based on contribution per limiting factor. Now let us have a look at this. This is again one of the most important areas. Okay, there are too many combinations possible. Yes, we put all those here in the form of a chart. We'll fill up this master chart. Limiting factor decisions. What all could be possible? We are telling limiting factor. That is resources available is less than resources required. Suppose I'll tell yes, I want total 100 days to study for CA final, but I have only 20 days. So number of days is a limiting factor. Yes or no? Suppose I have a demand of 10,000 shirts, 20,000 pants. To fulfill this, I want 50,000 labor hours, but I have only 20,000 labor hours. Labor hours is a limiting factor. It is resources available is less than the resources required. It is a limiting factor. So what all decisions do we take? Either company will tell, yes, anyways, it is a limiting factor, right? Let us produce only one product. Or company will tell, no, we want to produce both the products. Company is producing one product, what do we do? If company is producing more than one product, what do we do? Again, company is producing more than one product. Either we'll be having only a single limiting factor, only labor hours is shortage, or we'll be having multiple limiting factors. Well done. Labor hours is also shortage, machine hours is also shortage, material is also shortage, everything is shortage. Now, if we have multiple limiting factor, either rank will be same or else rank will be different. These many combinations we have individually, slowly, one by one. Let us try to understand. First, if company is deciding will produce only one product, yes, how do we take a decision? Suppose we have two products. We have a shirt, we have a pant. Yes, which one should we produce? How do we decide? If we produce shirt, the total contribution is 1 lakh. If we produce pant, the total contribution is 1.5 lakh. Which one will you produce, students? Yes, obviously we'll be producing pant. Yes, how do we take a decision? We will select the product where total contribution is maximum. Yes, where we are getting total contribution maximum, that is what we will select. I've told you, while we take a decision, we are going to look where the total contribution is maximum, that option we will select. Now, how do we get total contribution? Simple, is contribution per unit into number of units. Yes, sir. So if you know what is the contribution per unit, what is the number of units, we will get to know what is the total contribution. Contribution per unit, what is it? It is selling price minus variable cost per unit. Yes, number of units. How do we get the number of units? It is number of units demand or capacity, whichever is lower. What does it mean? Suppose for shirt, okay, for shirt I have a demand for 10,000 shirts, but labor hours is limited. Due to labor hours, I'll be in a position to produce only 5,000. I'll tell, I have a demand for 10,000, but what do I do? Labor hours is not there. I will be in a position to produce and sell 5,000 units only. So I will produce 5,000, sell 5,000, get profit on 5,000. Second case, I'll tell, my capacity is 10,000. I have a capacity to produce 10,000 shirts. But what do I do? Demand is for 5,000 only. If I produce more than 5,000 also, no use. Ultimately, I'll be in a position to sell 5,000 shirts only and earn profit on 5,000 shirts only. So number of units is nothing but number of units demanded or capacity, whichever is low. What is the steps we follow? First, we calculate number of units. How do we calculate number of units? Is number of units demanded or number of units as per the production capacity, whichever is low. Then calculate total contribution, which is contribution per unit into number of units. Yes, whichever product is having the highest total contribution, that is what we will select. Let us try to understand it with the help of a simple example. Suppose we are a company, we are producing two products, P and Q. Selling price is given, variable cost is given, how many units is in demand, that is also given. How much material is required to manufacture one unit, it is given. How much labor hours is required per unit, that is also given. Maximum material, maximum raw material we have is 15,000 kg. Yes, again, maximum labor hours we have is also 75,000. So company is taking a decision because the limiting factors is there. Let us do one thing. Let us manufacture only one product. Which product should we manufacture? How do we take a decision? First, we take a decision based on total contribution. Is contribution per unit into number of units gives us the total contribution. So how do we calculate the total contribution? We have calculated contribution per unit. Look at this. If we sell P, the selling price is 100, variable cost is 40, contribution per unit is 60. If we sell Q, selling price is 200, variable cost is 100, contribution is 100. If we get how many units we will produce and sell, we'll be in a position to see which is better, which one should. Let us calculate how many units we'll be in a position to produce and sell. Firstly, for P and Q or X and Y, whatever it is, we don't know what is the P and Q it is. How many units is in demand? Yes, for P we have a demand for 10,000 units. For Q we have a demand for 8,000. Now, how many units will be in a position to produce? Based on raw material, question has told that raw material is 15,000 kg only. Yes, so maximum raw material we have is 15,000 kg. To produce 1 unit of P, how much kg raw material is required? 2 kg raw material is required. So how many units of P will be in a position to produce? 15,000 divided by 2, 7,500 units of P. For raw material Q, 15,000 raw material we have. For every unit of Q, we want 3 kg raw material, so only 5,000 units of Q will be in a position to. Based on labor hours, how many labor hours we have? 75,000 labor hours we have. To produce P, we want 10 labor hours. So we'll tell, if we produce P, 75,000 labor hours we have. For every unit, 10 hours is required. So we'll be in a position to produce 7,500 units. For Q, for every unit, we want 12 hours of labor. So we'll tell we have 75,000 hours. For every unit, we want 12 hours. So how many units will be in a position to produce, students? 6,250. So maximum how many units of P we will be in a position to produce and sell? Tell me, students, maximum how many units of P and Q we will be in a position to produce and sell? Yes, P, how many units will be in a position to produce and sell? Yes, even though the demand is 10,000, maximum units which we can produce is only 7,500. So we will produce and sell 7,500 units of. For Q, demand is 8,000, but what do? Raw material available is only of 5,000. So we'll be in a position to produce and sell only 5,000. Is it clear, students? So we have 7,500 units of P, 5,000 units of Q. So total, yes, we have 5 lakh for Q, 4.5 lakh for P. Yes, 5 lakh for Q, which is giving us higher contribution, students, which is the ultimate decision, which is giving us a higher contribution. Q is giving us a higher contribution. So what is the final decision we'll be taking? Yes, if you are producing only one product, let us go ahead and manufacture Q, because that is giving us a contribution of 5 lakh. Is it clear, students? Yes. So what do? If company decides that we'll produce only one unit, how do we take a decision? We'll be taking a decision based on wherever total contribution is maximum. How do we get total contribution? It is contribution per unit into number of units. How do we get number of units? It is number of units demanded or the number of units for which we have the production capacity, whichever is lower. This is the first type of question which can come. Next, we have the second type of question. Second type of question, company is telling, no, we want to produce both the products. We want P also, Q also. How many units of P? How many units of Q? That is the question. So we want to calculate the product mix. Company is manufacturing more than one product. Now, yes, two cases. Either if there is only one limiting factor, or else there are more than one limiting factors, but ranking as per all the limiting factors is the same. Either I am telling only labor hours is limiting factor, or else I tell, yes, material is also limiting factor, labor is also limiting factor, overhead is also limiting factor. But in material also, rank of P and Q is 1 and 2, labor also 1 and 2, overhead also 1 and 2. So what is the obvious? First, how much ever hours is available, I will produce P. Next, I will produce Q. Okay, so either if only one limiting factor we have, or we have multiple limiting factor, but rank is same, then what we do? Based on contribution per limiting factor, wherever it is maximum, that we will produce first. Okay, but the problem comes if ranking is different. Suppose the ranking is 2 and 1 here. Yes, now I don't know whether to produce P, whether to produce Q. Based on material and overheads, it is P, but based on labor, it is Q. Then what do we do? How do we take a decision? That we'll discuss later. But now it is again simple. How do we take a decision? Firstly, we need to see if our resource is a limiting factor. Okay, yes. How do we check if our resource is a limiting factor? Any resource is a limiting factor if its availability is less than the requirement. Yes, suppose labor hours required is 50,000 hours, but available is only 30,000. We'll tell it is a limiting factor. If it is a limiting factor, what is the steps we follow? First, we calculate contribution per unit. Contribution per unit is sales minus variable cost. Then we calculate contribution per limiting factor. Suppose I am telling if I sell P, I will get 100 rupees. But to earn this 100 rupees, I need to work for 2 hours. I will tell it is effectively 50 rupees per hour. How do we get contribution per limiting factor? Is contribution per unit divided by limiting factor per unit. Yes, we do that. Next, we rank the products based on contribution per limiting factor. Suppose P contribution per labor hour is 50, Q contribution per labor hour is 40. Which is best? We'll tell P is best, first priority we give it to P, Q is second, second priority we give it to Q. So first we produce maximum P, then balance hours we produce Q. We will allocate the resources based on the ranking so made. Is it clear, students? If we have a single limiting factor or if we have multiple limiting factor but rank is same, then simple one line thing, allocate resource based on contribution per limiting. Yes, we will calculate contribution per limiting factor and based on that we will be allocating the resource. We have single limiting factor or multiple but rank is same, allocate resource based on contribution per. Whichever product is having the highest contribution per limiting factor, produce that first. Next product go next. Next product go third. Yes, this is what we do. However, a note is there. If a minimum demand is to be fulfilled for any product, then first fulfill that minimum demand or the balance resources allocate as per the rank. Suppose we are telling yes, P is higher priority. P is giving me more contribution per labor hour. But what company has done? Company has a long-term contract wherein we are telling yes, to our old customer we have told every month 10,000 units of Q we will give. Irrespective of whatever contribution is, this existing order we need to fulfill. So if any minimum order is there, first we will fulfill that. For balance hours only, we will look at which is better based on that. If any order is committed, we cannot go back. Yes or no? एक बार मैंने commitment कर दी तो फिर मैं अपने आप की भी नहीं सुनता. Yes or no? That's what we are telling. If you have committed to any order, then we don't see if the contribution is more or less, we fulfill it. Only for the balance hours, we look at contribution per labor factor and then accordingly take a decision. Is it clear, students? Yes. Product mix decisions. We have two questions, illustration number 8 and illustration number 9. Okay. Illustration number 8. Let us have a look at illustration number 8, page 5.27. Yes, illustration number 8. What do we have? BNZ Limited is engaged in manufacturing of plastic bottles. Yes, at present, what is our business? We are producing plastic bottle. Okay, factory has 5 machines and it is capable of producing 40 bottles per hour. If we work for 1 hour, we will be in a position to produce 40 bottles. That is our existing capacity. Now, variable cost per bottle is 0.32, selling price is 0.8. Company has received an offer from other company for manufacture of 40,000 units of a plastic molded toy. What we are doing, existing we are producing bottle. A new customer has come and he's asking, can you produce us a toy as well? Yes, the price is 30 rupees. The variable cost is 24 rupees. If the company takes up the job, it has to meet expenses of making a special mold. If we take up the order, we should purchase a special mold specifically for this order. So the cost is 1 lakh rupees. It is a specific fixed cost. That is also relevant. Company's time study analysis shows that machines can produce only 16 toys per hour. If we work for 1 hour, we will be in a position to produce 16 toys. Company has a total 10,000 hours capacity in which toy is required to be manufactured. Fixed cost, excluding the cost of construction of mold, is 10 lakh rupees. This is the general fixed cost, allocated fixed cost. It is irrelevant. We tell, yes, get lost. We are not looking at you. Company has an order for 3 lakh bottles. Company is already having an order for 3 lakh bottles. Now, required, what is required? Advise the company to take up the order for manufacturing plastic molded toys when company has an order for 3 lakh bottles. So we are having an order for 3 lakh bottles. The question is, should we take up the order for this toy or not. Yes. How do we look at it? Look at this. We are B and Z. Yes. We have an existing product. We are existing at present. We are manufacturing and selling. At present, we are manufacturing and selling bottle. Proposed, what we are planning to produce and sell, toy. It is a one-time offer. How many units customer has demanded? 40,000 units. Selling price is 30. Variable cost is 24. Special mold we need to purchase, for which the cost is 1 lakh rupees. In 1 hour, we will be in a position to produce 16 units. First, if the existing demand is 3 lakh bottles. First, we see if we have the capacity or not. Yes or no? Firstly, we see if we have the capacity. Can we produce both? Yes, we have 3 lakh bottle. 3 lakh bottle also, toy also. Both, whether it can be produced is what we see. How much hours is there? 10,000 hours is. How much hours is required? Let us look at this. We want 3 lakh bottles. Okay, 3 lakh bottle we have to produce. What is question telling? If we work for 1 hour, 40 bottles can be produced. In 1 hour, 40 bottles. So 3 lakh bottles. How much hours is required, students? Is 3 lakh divided by 40. 7,500 hours is required for bottles. So for bottles, 7,500 hours is required. Total 10,000 hours is there. For bottles, 7,500. Extra 2,500 hours we have. Let us see in that 2,500 hours, can we produce toys? 40,000 toys is required. In 1 hour, we can produce 16 toys. So we'll tell 1 hour, 16 toys. So 40,000 toys. How much hours is required, students? It is 40,000 divided by 16, 2,500. Yes or no? So availability requirement is 10,000 hours. Total to produce bottle also, toy also, 10,000 hours is required. Available is also 10,000 hours. We have 10,000 hours available also. The shortage is not there. So labor hours is not a limiting factor. How much labor hours is required, that much we have. So we need not worry about whether we have labor hours or not. So the only thing we need to worry is that offer is there, right? Whether that offer is profitable or not. If it is profitable, we will accept. If it is not profitable, we will not accept. As simple as that. We'll see what is the net benefit if we accept the offer. First, how much revenue we will get, students? What is the question telling? 40,000 toys we are selling. Every toy we are selling at 30 rupees. We will tell 40,000 units at the rate 30 rupee per toy. So how much we'll be getting, students? 12 lakh rupees revenue we'll get if we accept toy. Yes, how much variable cost we should incur? Variable cost given here is 24 rupees. So specifically, if we accept the decision, we have to incur variable cost of 24 into 40,000 units. So how much is it? 9,60,000 variable cost we should incur. Again, specifically for this order, we want a mold. For the mold, we should pay 1 lakh rupees. Overall, specific cost, relevant cost is 10,60,000. 12 lakh is a revenue. So 1,40,000 is the net benefit. Okay. So what is the conclusion we'll be taking? We should accept the offer. Why? Firstly, because sufficient hours is also available. Anyways, hours was labor was lying idle. His capacity was lying idle. Hours is available. Again, if we accept, we'll be getting a benefit of 1.4 lakh. So we should accept the offer. This is the first case. Is it clear, students? Any doubts here? Okay. Now, second case. What is the second case? If the order for supply of bottle increases to 4 lakh bottles, will you advise the company to accept the order for supply of toys? State the reason. Now company is telling, assume the order for bottle is not 3 lakh. We have 4 lakh bottles order. Now what will you do? Will you accept? Will you not? Tell the reasons. Firstly, we will see if the factor is a limiting factor. Yes or no? Yes. If there is no limiting factor, we will anyways accept. But if it is a limiting factor, then we need to think. Firstly, we'll tell, okay, total how many bottles we want? 4 lakh bottles we want. In 1 hour, we'll be in a position to produce 40 bottles. So 4 lakh bottles. How much hours is required? 4 lakh divided by 40, 10,000 hours is. Again for toys, 1 hour will be in a position to produce 16 toys. So for 40,000 toys, how much hours is required? 40,000 divided by 16, 2,500. Now look at this. How much hours is required? 12,500 hours is required. But how much hours is available? Only 10,000 hours is available. That means there is a shortage of 2,500 hours. What is the meaning, students? It means that labor hours is a limiting factor. Labor hours is a limiting factor. If any factor is a limiting factor, how do we take a decision? We take a decision based on contribution per limiting factor. Now we'll see for bottle, what is the contribution for limiting factor? For toy, what is the contribution per limiting factor? And based on that, we will take the decision. Is it clear, students? Okay, yes, we will calculate what is the contribution per machine hour. We'll tell yes, bottle altogether 4 lakh units is required, toys altogether 40,000 units is required. Now, if we sell the bottle, every bottle we will be selling it at what price, students? Bottle we are going to sell it at 0.8 rupees, yes or no? So how much revenue we will get? 4 lakh into 0.8, 3,20,000 will be the revenue. Yes, how much is the variable cost? 4 lakh into 0.32, 1,28,000 is a variable cost. We'll reduce a specific fixed cost as well. Yes, what are we looking? Net, how much we are getting. Okay, so if I'm selling 4 lakh bottle, okay, here there is no specific fixed cost. When it comes to toys, I will tell you. Yes, how much is the contribution? 3,20,000 minus 1,28,000. 1,92,000 rupees. The total contribution we will be getting by selling 4 lakh units. It is by working how many hours? If we have to produce bottles, we have to work for 10,000 machine hours. We'll tell if we work for 10,000 machine hours, we'll be getting 1,92,000. So per machine hour, how much we'll be getting, students? Per machine hour, we'll be getting 19.2 rupees. Is it clear? If we work for 1 machine hour, from the bottle, we are getting 19.2. Now we'll see from the perspective of toys. Toys, at what price we are selling? We are selling every toy at 30 rupees. So 40,000 toys at the rate 30 rupees. 12 lakh rupees will be the revenue we'll get. So if we sell the toys, we will get 12 lakh. So for this, what all cost should we get? To get this revenue, what all cost specifically we should incur? Look at this variable cost. How much is the variable cost? 24 per toy into 40,000 toys. 9,60,000 variable cost we should incur. A specific fixed cost, 1 lakh rupees mold also we should purchase. So net how much we'll have? Look at this. Look at it as an order. Yes, 40,000 toy order. Now look at the cost. How much we will get? 12 lakh we will get. How much variable for this one order? For this one order, how much we should incur? 9,60,000 for variable cost we should incur, and 1 lakh rupees for yes mold we should incur. So altogether 10,60,000 we should incur. So how much net savings we will be having? So 10,60 minus 12, 1,40,000 rupees is the contribution. 1,40,000 contribution we get by working for 2,500 hours. So per hour we'll be getting rupees 56 as the contribution. Okay, is it clear, students? This is important here. Specific fixed cost also we will be reducing. Yes, while we calculate contribution, because we want to see net how much cash is there. Yes, from the toy revenue I've got 2,60,000. For this 40,000 toy, yes, 9,60,000 I pay for the variable cost. 1 lakh for the machine also I'm paying for these 40,000 units. So this is also specifically traceable for every unit. Okay, so we'll tell contribution per machine hour. For bottle it is 19.2. For toy it is 56 rupees. Which is having a higher contribution? Toy is having a higher contribution. Bottle is having a lower contribution. So what is the decision, students? So what is the decision? Tell me, students. What is the decision? Yes. So first priority we will be giving to toys. So first what we'll tell? Yes, 10,000 total, 10,000 machine hours is there. First let us try to produce 40,000 toys. For 40,000 toys, how much hours is required? 2,500 hours is required. Yes or no? Because in 1 hour, 16 toys. So for 40,000 toys, 40,000 divided by 16. Yes, 40,000 divided by 16, 2,500 hours. So first priority if we give to toys, next balance 7,500 hours will be available for bottle. So what do we do? In the 7,500 hours, how many bottles will be in a position to produce? 3 lakh bottles we will be in a position to produce. What is the question telling? In 1 hour, how many bottles will be in a position to produce? In 1 hour, 1 hour will be in a position to produce 40 bottles. So in 7,500 hours, how much? It will be 3 lakh bottles. Here, the product mix will be 2,500 units of toy and 3 lakh bottles. Yes. So when do we maximize the profit? Okay. If we produce 2,500 units of toy, that is, if we accept the special order, okay, the one-time order, and we reduce our existing order. Our existing order, I have 4 lakh units of existing order. But if I look at it only financially, what I'll have to do? I'll have to sacrifice 1 lakh bottles. Customer demand is there for 4 lakh bottle. Customer has made a demand. Yes, he's telling, yes, every month I want 4 lakh bottle. And I've told, okay, I will give you. But this month I'm telling I can give you 3 lakh bottle only. So what is the decision? What is the advice we are giving? Look at this. From a financial perspective, first we will tell from a financial perspective. Financial perspective, we are telling machine hours is a limiting factor. Decision will be based on contribution per machine. So based on that, what is the decision? We should accept the toy order. What is the non-financial factor we need to keep in mind? This toy order is only one time, only for this month he is telling. Next month it will not be there. But bottle order, it is a recurring. It is our existing product. Every month is there. We cannot sacrifice our existing order just for a one-time order. Because next month again it will not be there. And we will not be having our existing customer also. Yes or no? Next month new customer will not be there. Existing customer also would have left us because we have given priority to him. So what is question telling? This is just a one-time special order, not permanent. Fulfilling existing order is necessary for long-term customer relationship. If we have to be in the business for long-term, we need to give priority to our existing orders. We need to give priority to our permanent order, not to these one-time special offers. What company has to do? Company should try to retain its existing customers and keep them happy. Why? Because cost of keeping an existing customer is always less than cost of acquiring a new customer. Yes, it is much simpler to keep an existing customer happy than to acquire a new customer and keep him happy. What company is telling? Yes, you have bottles, existing customer from bottle. Keep him happy. He will be there with you for the long term. He is anyways just for the short term. Yes. So what advice it is telling is we need to always keep in mind the long-term customer relationship and only then take a decision. Just because now we are getting some amount of contribution, we should not take a decision. Keep long-term customer relationship in mind and based on that take a decision. Again, yes, answer is telling we can think of outsourcing option as well. If possible, yes or no, we accept toys offer and give it to some third party, get it outsourced from him, give it to customer. Or else that 1 lakh bottles, okay, yes, get it from a third party so that we can fulfill the order to our eventual. This is what it is telling. So overall, everywhere advice will tell financial what is good, non-financial what should be done. Overall, consider financial also, non-financial also. Financial is required for short term, non-financial is required for long term. This is what our answer will tell. Look at this. Contribution per machine hour we have calculated. How much we have got? 19.2 and 56. So based on that, what is the decision? If existing demand is for 3 lakh bottles only, we have sufficient hours. So we should accept because we'll get additional profit of 1,40,000. However, if the number of bottle demand is 4 lakh bottles, then 2,500 labor hours is a shortage. The company has to decide. Okay, what it is telling first, it is telling based on limiting factor, so based on financial factors, machine time is limiting. So contribution per machine hour, based on that we should take a decision. Based on that, the decision is we need to manufacture toys. However, prioritizing contribution based on production based on contribution per machine hour to maximize the profit. However, existing order fulfillment is necessary for long-term and sustainable customer relationship. Yes, this is one thing which the question is telling. Long-term customer relationship has to be kept in mind. Yes, so long-term customers, yes, they give valuable benefits to company and all of those stories is telling. Yes, again question is telling cost of keeping the existing customer is less than cost of acquiring new customer. It's simpler to keep our existing customers happy. Again, we need to keep all these factors before accepting the order. Again, if we have an option, we need to explore outsourcing. Yes, if we can outsource the production of toys to some third person and thereby fulfill the contract. This is what we need to keep in mind. Is it clear, students? Yes. So from a financial factors, okay. So from a financial factor, it is better if we manufacture toys. But from a non-financial factor, what do? Yes, we are telling if we manufacture the toys, what happens? We'll have to sacrifice the bottles. And it is not good because this is just a one-time order, that is a recurring regular order. Is it clear, students? Now, third option, third part of the question is again very interesting. Now, look at this. Suppose there is an associate company, we have a sister concern. It has idle capacity and is willing to take up the whole or part of the manufacturing of plastic molded toys on subcontracting basis. So now we got an offer. Yes, we got an offer for toys. There is our sister concern which is telling, yes, you want to manufacture toys, we have idle capacity. If you want, we can do it and give. So we'll ask at what price you'll do it and give. Yes, they'll tell you are selling it at 30 rupees, right? We can give it to you at 28 rupees. You need not do anything. You just sit. Yes, we will give it to you at 28. You purchase at 28, sell it at 30. You will be getting 2 rupees profit. Now I'm thinking, yes, it is good. But again, I'm thinking, if I do it by myself, what is the variable cost I'm incurring? If I'm doing it by myself, the variable cost I'll be incurring is 24 rupees only. Look at this. Where is it given? 24 rupees only. Okay. So if I'm doing it by myself, the variable cost will be 24 only. So look at this. I have two decisions. Okay. Yes. So what associate company is telling? Associate company is telling, yes, we can provide it to you at 28 rupees per toy. The question is asking is, yes, what question is asking is, how much spare hours is needed? How much spare hours is needed to justify manufacturing on our own rather than subcontract? Now look what is happening. There are two options. Yes, first option, we give it to subcontractor. We give it to subcontractor. What is happening? He will give it to us at 28. We will sell at 30 rupees. We will earn 2 rupees profit. Direct profit. Need not worry at all. But if we manufacture on our own, yes, 30 rupees is selling price, 24 is variable cost. 6 rupees contribution will be earning. Which is better? Yes or no? If we manufacture 6 rupees, we earn. If we subcontract 2 rupees, we earn. Which is better, students? Should we manufacture or should we give it on subcontracting? Which is better? Yes, we will manufacture. Yes or no? This is what it looks from the outside. But wait, what happens is, if we are manufacturing, we need to be incurring a specific mold for which we have to incur 1 lakh. If we are subcontracting, that cost need not be incurred. Yes or no? This is the catch here. Now look at this. If company decides, now we are taking a decision, okay, let us manufacture on our own. If we manufacture on our own, what is the benefit we'll be having? We'll be having a benefit of savings in variable cost per unit. Yes or no? If we buy from outside, if we get it from subcontractor, we have to incur 28 rupees. But if we manufacture on our own, our cost will be 24 rupees only. So we will be saving 4 rupees for 1 unit. But what is the extra cost we have to be incurring? Extra cost, what we should incur? For special mold, 1 lakh rupees we should. Yes or no? Suppose I'm telling, if I accept the decision, cost I'll be incurring is 1 lakh rupees. Benefit I'll be getting is 4 rupees. So to absorb this cost of 1 lakh rupees, how many units should I sell? I will tell how many units should I sell is 1 lakh divided by 4 rupees per unit. is 25,000 units. I will tell, if I am selling at least 25,000 units, then it makes sense to manufacture on my own. Yes or no? If I manufacture 25,000 units or more than 25,000 units, from every unit 4 rupees I will save, total 1 lakh I will save. From this I will pay for the special mode. But if I am producing only 10,000 units, 10,000 units into 4, 40,000 units only I will be saving. But if by saving 40,000, I have to pay 1 lakh rupees special mold cost. I'll tell not required. I'll give it to subcontractor only. So minimum how many units we should produce to recover our fixed cost? At least 25,000 units we should produce. We are telling if at least 25,000 units we are producing, then it makes sense to produce on our own. Otherwise, give it off to subcontract. What is question asking? How much machine hours is required? So we are telling how much machine hours is required. In terms of units we don't want, in terms of machine hours we want. We are telling in 1 hour we can produce 16 toys. So for 25,000 toys, how much machine hours is required, students? 25,000 divided by 16, 1562.5. 1562.5 or 1560. So what we are telling, if at least 1563 hours spare capacity is there with us in our manufacturing plant, then we can do it on our own. But if the spare capacity is less, if the spare capacity is 1000 hours only, then it is better we give it off directly to the subcontract. Is it clear, students? The conclusion is, if at least 1563 hours spare capacity is there with us, we will manufacture on our own. Otherwise, what we will do? Yes, otherwise what we'll do? We'll give it off to the subcontractor only. That is what is given here. So let us look at the answer. Yes. So minimum number of toys which is required to justify. It is, yes, extra cost 1 lakh we have, saving 4 rupees we are saving, 25,000 toys we want. So for 25,000 toys, how much hours is required? 1563 hours we want. So if we have, yes, we as a company B and Z, we have 1563 hours. Yes, we'll do it on our own. If not, we'll give it off to a subcontractor. Is it clear, students? Yes, now we have illustration number 9, page 5.29. Yes, a very important question. If at all this question comes, minimum for 20 marks it will come. Minimum for 20 marks. Okay, let us look at this. So what all we have seen, we are looking at product mix decision. That is, how do we take a decision if we have a limiting factor? Two possibilities. If company tells we will produce only one product, so whichever product has the maximum total contribution, that will produce. Contribution per unit into number of units. Number of units is number of units as per demand or capacity, whichever is low. If company is producing more than one product, it will either will be having a single limiting factor or multiple limiting factor. Even in multiple limiting factor, rank as per all limiting factor is same or rank as per all limiting factor is different. If we have single limiting factor or rank as per all the limiting factor is same, then simple decision, we will be allocating the resources based on contribution per limiting factor. But if we have multiple limiting factors and again rank as per all the limiting factor is different, then how do we do? What do we do? We have more than one limiting factor also. Ranking as per all limiting factor is also different. Then what do? We use linear programming to calculate that set of alternatives which provides us the maximum contribution. Okay, yes, it is applicable only if company manufactures two products. If there are more than two products, we need to adopt equation approach. Equation approach is not relevant for the examination. What is there is only LPP. So how do we apply LPP? Let us try to understand it with the help of a question. Along with the question itself, we will try to understand how we will apply LPP. It's a very important question. If at all it comes, bare minimum 20 marks. Illustration number 9, page 5.29. Company is manufacturing two products, X and Y. Each product passes through two departments, A and B, before it becomes a finished product. Data is given. Maximum how many units we can sell is given. Yes, per unit, selling price is given, machine hours is given, and yes, whatever is the cost we are incurring is given. Okay, now look at this. maximum capacity in department A. In department A, maximum 3,500 hours is there. In department B, maximum 3,640 hours. Okay, maximum quantity of material available is only 17,000 kg. Each product requires 2 kg of direct material. Purchase price per kg is 5 rupees. Yes. Find out the optimum product mix. Optimum product mix. We want to produce X also, Y also. How many units should we produce? Again, on the overview, what all limiting factors are there? Yes, first, direct material seems to be a limiting factor. Department A hours seem to be a limiting factor. Department B hours also seem to be a limiting factor. So we have multiple limiting factors. How do we take a decision? Let us look at this question. First we need to evaluate the limiting factor. Yes or no? Yes, just because they are telling material is required, labor is required, we cannot tell that it is a limiting factor. We need to see how many factors are actually a limiting factor. First, we have direct material whose data is given, department A data is given, department B data is given. Yes, question had told that direct material, maximum material available is 17,000 kg, maximum hours in department A available is 3,400 hours, in department B maximum hours is. Let us calculate how many hours is required. For material, each product requires 2 kg of material. So A also we want 2 kg, B also we want 2. Sorry, X also we want 2 kg, Y also we want 2 kg. Yes, 7,400 units of X is required for every unit 2 kg. 14,800 kg is required for X. 10,000 units of Y is required for every unit 2 kg. 20,000 kg of Y is required. Sorry, 20,000 kg of direct material is required for Y. Altogether, 34,800 kg of direct material is required. Yes, 34,800 kg direct material is required. How much is available? Only 17,000 kg. So whether direct material is a limiting factor? Yes, direct material. Now department A. Yes, department A, how many hours we are taking? Look at this. Department A, we are taking Department A, we are taking 0.5 hours and 0.3 hours. So for 7,400 hours, 0.5 hours, 3,700 hours. For 10,000 units of Y, 0.3 hours is 3,000 hours for Y. Altogether, we want 6,700 hours is required in Department A. But how much is available? Only 3,400 hours. So Department A is also a limiting factor. Now Department B. Yes, how much hours is required? For X 0.4 hours. So 0.4 hours per unit into 7,400 units. 2,960 hours for X. 0.45 hours per unit into 10,000 units. 4,500 hours for Y. Altogether 7,460 hours is required in Department B. How much is available? Only 3,640. So Department B is also a limiting factor. So all these three factors, all these are limiting factors. Okay, so this is the step number 1. Firstly, we have seen, yes, all these resources given, are they limiting factor or not? Now, second thing which we are supposed to do is, we need to give the rank based on contribution per limiting factor. What we have done, selling price minus variable cost, we have arrived at contribution per unit. Yes, contribution per unit, we have got 36 and 31. For X it is 36, for Y it is 31. Now we need to calculate contribution per limiting factor. So we have 3 limiting factor. Firstly, we have a direct material as a limiting factor. Next, we have Department A labor hours as a limiting factor. Thirdly, we have Department B labor hours as a limiting factor. So let us see how do we allocate. Firstly, we tell 36 rupees and 31 rupees respectively we are getting. To produce 1 unit of X, 2 kg of raw material is required. So per kg of raw material, how much contribution we are getting? Contribution per limiting factor. It is contribution per unit divided by limiting factor per unit. 36 divided by 2, 18 rupees. And 31 divided by 2 is 15.5. So which is better, students? We'll tell. We'll give a priority to X. Next, we'll produce Y. This is as per direct method. Now, as per Department A, okay, to produce 1 unit of X, we have to spend 0.5 hours in Department A. By producing 1 unit, we get 36. So 36 divided by 0.5, 72 rupees, and 31 divided by 0.3, we'll be getting 103.33. So it is 72 and 103.33. Yes, which is having a higher rank, students? Y is having the first rank, X is having the second. Yes, based on department B, 36 per unit we get. For 1 unit, 0.4 hours. So 36 by 0.4, 90 rupees per hour in department B. 31 we get for that 0.45 hours. So 31 by 0.45, 68.8 we get in for Y. Again, we have to give the ranking. First ranking for X, second ranking. Now look at the ranking based on material. First will produce X, second will produce Y. Based on department A, first will produce Y, second will produce X. Based on department B, first will produce X, second will produce Y. Whether the ranking is same as per all the limiting factors, whether the ranking is same as per all the limiting factors, students, tell me, or is it different as per all the limiting factors? Yes, it is not the same. So we cannot directly arrive at a decision. So what is it that we are telling? Yes, so ranking is not the same. So what we need to do is we need to go for LPP. So basically till now, whatever steps we have done is everything was useless. Nothing has got us till the answer. Yes, the only conclusion, first we looked at whether it is a limiting factor. We got to know, okay, all three are limiting factor. Second, we looked at the contribution per limiting factor. We got to know, yes, all products, yes, all factors have different ranking. So we need to follow LPP. Now we need to follow LPP. Finding optimal mix using LPP. How do we use LPP? Yes, we'll understand it through this example. Yes, we only have this single question throughout in our study material. So yes, most probably, if at all a question is asked, it will be this question. So what we'll do, what we want, we are selling X and Y. Yes, what we want, well, we are selling the goods, we want our profit to be maximum, we want our contribution to be maximum. Let us assume we want the product mix, right? How many units of X and Y we are selling? Let us assume we are selling X units of product X, Y units of product Y. This is the assumption we are taking at the start. So we are selling X units of X, Y units of. So this is the first assumption. First, objective functions and constraints. What is our objective? As a business, we are selling the goods. What do we want to do? We want to maximize the contribution. Yes or no? Contribution should be always maximum. We will tell maximize the contribution. How do we get the contribution? We want the maximum total contribution. Yes, total contribution is contribution of X plus contribution of Y. What is contribution of X? Yes, contribution of X is 36 rupees per unit into X units, 36X. Contribution of Y is 31 rupees per unit into Y units, 31Y. So the objective functions, what is our objective? We want to maximize the contribution. How do we get the contribution? Is 36X plus 31. This is our objective, but it is not that simple. Why? Because we have constraints. What all constraints we have? We cannot produce as many units as we want. We have constraints. Firstly, we have material constraint, department A constraint, department B constraint. Yes, demand X constraint, demand Y constraint. Material constraint. How much maximum material is available, students? Look at this. Maximum material available is 17,000 kg. So whatever we are producing, maximum material will be in a position to use is only 17,000 kg. And how much material will be using? For 1 unit of X, 2 kg of material is required. Like this X units we are producing. For 1 unit of Y, again 2 kg of material is required. Like this Y units we are producing. So we have the first equation, 2X plus 2Y should be less than or equal to 17,000. Next, department A. Department A, maximum how much hours is available, students? Maximum hours available is 3,400 hours. So X and Y units, production should be within 3,400 hours. Again, how much hours it is taking? To produce 1 unit of X in department A, 0.5 hours is taking. And how many such units we are producing? We are producing X. To produce 1 unit of Y, 0.3 hours it is taking. And how many units we are producing? Y units. So this is the constraint. Again, department B, how much maximum hours we have? Maximum we have 3640 hours. So how we are producing? To produce 1 unit of X, 0.4 hours is required. Like this, we are producing X units. To produce 1 unit of Y, 0.45 hours is required. Like this, Y units we are producing. This is the third constraint. Again, question is telling maximum sales potential, maximum demand of X is 7,400. Is X should be less than or equal to 7,000. Maximum demand of Y is 10,000. Y should be less than or equal to 10,000. This is the condition. Based on this condition, we should maximize the contribution. Is this clear? Till here, things are clear. Yes. It is not a bouncer, students. Believe me, if you look at it properly, this will be the most scoring thing for you. Okay. So what we have done, again, I'll tell you, yes, we want product mix. How many units of X and Y should we sell? We'll tell, yes, we will sell X units of X, Y units of Y. First, what is our objective? We want contribution to be maximum. How do we get contribution? For 1 unit of X, we get 36. So it is 36X plus 31Y. That should be maximum. Yes. Subject to, we have conditions. Yes, we cannot use material the way we want. We cannot use labor the way we want. So we are telling, yes, what is the material constraint? 2X plus 2Y should be less than or equal to 17,000. Department A, what is the constraint? Department B, what is the constraint? Yes, demand of X, what is the constraint? Demand of Y, what is the constraint? All these conditions, these constraints are given. Now, based on it, we need to calculate the corner points. Corner points are required to be calculated. How do we calculate the corner point, students? If you remember, we would have done all of this mostly in our foundation or +1, +2. First way is we convert inequality into the equality and get the corner points. Yes or no? We convert inequality into equality and put if X is 0, what happens? If Y is 0, what happens? Suppose first constraint we have is 2X plus 2Y is less than or equal to 17,000. We tell 2X plus 2Y is equal to 17. First, we want corner point. So we'll tell if X is equal to 0, then what happens? 2Y is equal to 17,000. So Y will be 8,500. So this is one corner point. If Y is equal to 0, X will be 8,000. Similarly, we do for department A, we get the corner points. Similarly, we do for department B, we get the corner point. This is what we do. And to get the solution based on LPP, either we prepare this LPP chart. But believe me, in the examination, you will not be in a position to prepare this chart. Why? Because ICAI will not give you the chart paper. Yes, it will not give you the graph book. Again, most of us will not be having scale pencil. Yes or no? In that hurry, we will not be in a position to draw it precisely. So there is every chance, even if we use a chart, we will not be getting the correct answer. What do we do? In LPP, okay, if you can remember, if you do not remember, go back, have a lecture on LPP, the basics of LPP. What we want to do, we want to maximize the contribution. One thing is sure, the maximum contribution in LPP will be in one of these corner points. In any of these corner points only it will be there. Yes or no? Yes, any of these corner points only will be giving us the maximum contribution. We need to see which is that corner point at which we will get the maximum contribution. Now, corner point based on these equations we have got. Yes or no? Suppose this is the equation of material. Yes, if X if X is 0, what happens to Y we got? If Y is 0, what happens to X we got? Suppose this is department A. Here two equations we got. If this is department B, these two equations we got. What more we want is this point, and this point. Now, either you do graph, do all those drama, get the values, or simple, look at this. What is this? This is the point at which both the lines intersect. That means that both the equations should be fulfilling the conditions. Yes, we solve both the equations. Whatever is the value we get, that should be the point. Simple. What do we tell? Yes, we have to get corner points. How do we get the corner points? First, we get corner point by converting inequality into equality. Put X is equal to 0, what is Y? Y is equal to 0, what is X? That is first way. Second way, we should get more corner points by solving the equations. We need to go on taking a set of 2 equations. Firstly, we will take, yes, material and department A. Yes, we will solve the equation, we will get the corner points. Next, we will take department A and department B. We will solve, we will get the corner points. Next, we'll take department B and material. We'll solve, we get the corner point. Clear? Okay, this is what we will be doing. Yes, again, I will tell you what we have done. Yes, simple. Yes, in a limited time, we are trying to tell. Yes, LPP. What we do? What is our objective? First, we will assume the number of units as X and Y. What is our objective? We are selling the goods. Yes, our contribution should be maximum. So we'll tell maximize contribution. How do we get the contribution? It is 36X plus 31Y. This is subject to the constraints. Now to solve LPP, to get what is the unit of X and Y, we want the corner points. We know maximum contribution is somewhere lying in those corner points. So how do we get the corner points? Firstly, we take the equation, is convert it into equality. First put, if X is 0, what is the value of Y? Y is 0, what is the value of X? Based on that, we get the corner point. That is first thing. Second type of corner points we will be getting due to intersection of these lines. So if the lines are intersecting, we know that both the equations should be fulfilling. So we take both the equations, solve them, get the value of X and Y. So based on all this, we get the corner points. Now what we need to do? Now it is very simple. We have all the corner points available. Yes, we want to see at what corner point the contribution is maximum. At which point our contribution is maximum. How do we get contribution? We know it is 36X plus 31Y. By selling 1 unit of X, 36 rupees we get. Like this, X units will be selling. By selling 1 unit of Y, 31 rupees will be getting. Like this, Y units will be selling. So, you have to calculate the contribution at all the corner points. How do we get it? Firstly, yes, we need to eliminate all the non-feasible points. If we solve it using the graph, we get to know what is feasible, what is non-feasible, because we go on shading. This is not feasible, this is not feasible, this is not feasible. Here we have not drawn the chart. So we need to observe. Look at this. What question is telling is maximum demand of X is 7,400. So maximum units of X we could produce is 7,400. Maximum demand of Y is 10,000. Maximum units of Y we could produce is 10,000. So look at the first option. Is it feasible? X is 0, feasible. Y is 8,500, feasible, because maximum demand is 10,000. Second option, X is 8,500. Yes, what is the point by producing 8,500 unit of X? Well, the demand of X itself is 7,400. So it is not feasible. Third, demand of Y is 11,333. We'll tell maximum demand of Y itself is 10,000. Then what do we do by producing 11,333? Is not feasible. Fourth, 6,800, 0, feasible. 0, 8,089. This is also feasible. 9,100 units of X. Maximum demand itself is 7,400. So it is not feasible. Again, 4250, 4250 feasible. 4171, 4381 feasible. 3,700, 4,008 is feasible. So all these options we have. What is the first option? Yes, we sell 0 units of X, 8,500 units of Y. If we do this, how much contribution we get? Look at this. By selling X, we get 36 rupees. By selling Y, we get 31 rupees. We are selling 0 unit of X, so it is 36 into 0 and 31 into 8,500. So how much we'll get, students? We'll be getting 2,63,500. Next, 6,800 units of X into 36. Yes, we are not selling Y, we'll be getting 2,44,800. Again, 0, 8,089. It is 31 into 8,089 is 2,50,750. Again, 4,250X, 4,250Y. It is 4,250 into 36, 4,250 into 31, 2,84,750. Now, 4,171 into 36, 4,381 into 31, 2,85,967. Last one is 3,700, 36, 4,800 into 31, 2,82,000. Yes, so all these are the options. What do we want? We want the contribution to be maximum. Yes, we are selling X and Y. We want contribution to be maximum. Where is our contribution maximum, students? In all these, Where is our contribution maximum? The contribution is maximum here. This is the highest contribution, 417 on 438. Second highest is this one. So which one do we choose? We'll be choosing this one. This will be obviously our first choice. Yes or no? We will tell yes. If possible, we will try producing 4171 and 4381. Why are we telling if possible? Because there is a small possibility that it is not fulfilling all the conditions. Why? How? I'll tell you. Yes, LPP generally will be solving using graph. So in graph, we'll get to know this is feasible, this is not feasible, this is feasible. It should be below this, below this, below this. All that feasible region we get. We have done it using graph. So look at this material. This is the material line. This is the department A line. So it fulfills material condition. It fulfills department A condition. There is a possibility it need not fulfill department B condition. Here it fulfills department A, department B conditions. There is a possibility it need not fulfill material condition. So that again we need to see. Okay. Again complications are there, but this is how it is there. Okay. It need not be possible that the product mix which maximizes our contribution fulfills all the conditions, fulfill all the constraints. We need to see if it is fulfilling all those conditions or not. So what was our first product mix? We told we will plan to produce 4171 units of X, 4381 units of Y. So these are the conditions we have. We will see if they are fulfilled or not. If we are producing 4171 units of X, for every unit we want 2 kg raw material. 4381 kg units of Y. For every unit we want 2 kg raw material. Altogether we want 17,104 kg of raw material. How much raw material we have? We only have 17,000 kg raw material. So whether this condition is being fulfilled? No. This product mix is not fulfilling the direct material condition. So we cannot use this. So this is not feasible. We don't have 17,100 kg raw material only. We will tell this is not feasible. So which else product we go for? We go for this option. We will produce 4,250 units of X and 4,250 of Y. We'll tell we'll produce 4,250 units of X, 4,250 units of Y. So how much is the contribution we'll be earning? We'll be earning 2,84,750 rupees. The maximum contribution we can be earning. This is what this question is all about. Yes, look at this. I will explain it to you one more time. Firstly, if we are solving using LPP, yes, we need to consider it will be question will have given us 2 units. Okay, we'll consider the number of units as X and Y. First, what we'll do, we'll set the objective function. What is our objective? We are selling the goods. We want to maximize our contribution. So maximize the contribution. It is subject to constraints. What all constraints? It will be given in the question. Yes, note down the constraints. Now, to solve LPP, we want the corner point. So how do we get corner points? We have 2 ways. First, convert inequality into equality. Put X is equal to 0, get Y. Put Y is equal to 0, get X. That is the first way through which we get the corner point. Convert inequality into equality, get the corner point. Secondly, we also have corner point wherein 2 equations keep intersecting. So take 2 equations, take a set of 2 equations, solve, get X and Y. Next 2 equations, solve, get X and Y. Next 2 equations, solve X and Y. So we have all the options. Write down all the options. All those options which are not feasible, eliminate. And for all the balanced options, calculate the contribution. Yes, whichever is having a maximum contribution, that is the most preferred. But see if it is fulfilling all the conditions. If it is not fulfilling all the conditions, go for next. See if all the conditions is. If not, go for next. This way we need to do. Okay, this is how the answer is there. Look at the answer, students. Yes, first we have told we have calculated limiting factor. Yes, first we have calculated the limiting factor. We have told all 3 factors are limiting factors. Next, we have given a rank. Yes, based on department A, rank is 1 and 2. Here is 2 and 1. Here is 1 and 2. Again, we are telling yes, there is no possibility. What we need to do is LPP only we should do. So LPP, we have taken X1 and X2. We have taken X and Y. So they have we need to maximize contribution subject to the constraints. Material constraint, department A, department B constraint. demand of X, demand of Y constraint. What they have done, they have solved using the graph. Yes, if solving using equation was tough, think how difficult it will be to solve using graph. So they've done all these graphs, they've calculated. Okay, as they've calculated, they kept all these combinations. Again, they got this combination 4,171, 4,381, 2,85,000. Okay, that was the highest. Second highest is 4,250, 4,250. Again, they have told this combination is not possible because it is not fulfilling one condition. Material condition is not fulfilled. So it is not feasible. So we'll go to the next possible thing, that is 4,250 units of X and 4,250 of Y. This is how we solve this. Is it clear? Yes. If at all this question comes, it will come for 20 marks, sure shot. You cannot tell no need and all of that. Okay. Yes. The lecture notes. Okay. The lecture notes are available on Telegram. Yes. Whatever I'm scribbling here. Okay. I don't think there is any use for you guys. Okay. Before I scribble, whatever is the clean notes that is there on Telegram. Whatever I'm scribbling, if you want, if you drop a text on Telegram or drop a text on WhatsApp, I can send it to you. But it is not of much value, is what I feel. Okay, because I would have scribbled and done so many things. Okay. So how do we take a decision? Come back to the notes. We are going to use linear programming. How do we use linear programming? Yes, look at the steps. Yes, first consider the number of units of product as X and Y. What is the objective of business? Maximize the contribution. What is the contribution? We'll write. It is subject to, write down all the constraints. Next, we need to calculate the corner points. How do we calculate corner points? Two ways. First, convert inequality into equality, get the corner points. Second, take a set of two equations. Yes, solve them, get the corner point. Like this, we get the corner point. Calculate contribution at corner points. Corner point with the maximum contribution is. However, we need to see that if the selected corner point fulfills other conditions as well. One thing we need to keep in mind. This is how we solve this. Is it clear, students? So, going back, limiting factor decision. If rank is different, we solve using LPP. This is what we do. So, look at this. Product mix decisions. Okay, limiting factor when we have. If company has taken a decision, only one product will produce. We'll tell, okay, whichever product will give us the maximum total contribution, we will select that. Where in number of units, it is number of units demanded or capacity, whichever is. But if company wants to produce more than one unit, company wants to see what is the product mix. Two possibilities, if a single limiting factor or multiple limiting. Again, in multiple limiting factor, if rank is same or rank is different. If we have a single limiting factor or rank is same, it is simple. Yes, calculate contribution per limiting factor based on that. But if rank is different, we need to solve using LPP. Is it clear, students? Yes, the question is not over yet. Yes, I am not done. Okay, now, in view of the aforesaid production capacity constraints, what is the company deciding? Company is telling, let us produce only one product. Yes, let's not get into that headache of producing two products. Only one product will produce. Which product should we produce? And how much contribution will be earning? Which product should we produce? What is the decision, students? Whichever is the product that gives us the maximum contribution, that will produce. So if company decides to produce only one product, whichever product, either X or Y, wherever the total contribution is maximum, that will produce. How do we get the total contribution? Is contribution per unit into number of units. So what we have to calculate is the maximum number of units. Now look at this maximum number of units. We have X and Y. Its maximum demand is 7,400 and 10,000. Maximum production with raw material. Yes, total raw material is 17,000 kg. Yes, for 1 unit of X, we want 2 kg. For 1 unit of Y, we want 2 kg. How many units we can produce? 8,500 and 8,500. In department A, we have 3,400 hours. For 1 unit of X, we want 0.5. So we can produce 6,800 units of X. 3,400 by 0.3 will produce 11,333. Department B, 3640 hours is available for 1 unit of X, 0.4, 9100 units we can produce, 3640 for 1 unit of Y, 0.45, 8088 units we can. Okay, so maximum how many units of X we can produce and sell? Yes, in department A only 6800 we can do. So only 6800 units of X we can produce. Y maximum how many units we can produce and sell? 8088 units we can produce and sell. So we'll tell 6800 units of X, 8088 units of Y we are having. Okay, so 36 into 6800, we have 2,44,800 will be the contribution from X. 31 into 8000, 31 into 8088, we have 2,50,728. 2,50,728. Yes. Here we need to consider 8088. Institute in its answer has rounded it up. Rounding up is not possible because if we round up 8089 we cannot produce in department B. 8089 units into 0.45. It will be 3640.05 hours, but available is only 3640 hours. So logically, always we should round it down. Okay, but it is 0.05. Even if you round up also, yes, not make much of a difference. Which is better, students? Which one should we produce? Y is what we should. Yes, look at the answer. If you are producing only 1 unit, yes, if you produce X, 2,44,800. If you produce Y, 2,50,759. Therefore, Y we should produce. See, I have told, we have considered 8088. They have rounded it up. Rounding up is ideally, logically not possible. We should be rounding down only always. Okay, but anyways, the impact is minimal, so we can ignore that. Yes, this is the total content. Is it clear, students? Yes, so we have finished the third concept, product mix decision. If it is useful, we'll share the notes, students. Don't worry. As and when the session gets over, the notes will be shared in the Telegram group. Okay, don't worry on that. Yes, from morning till now, all concepts are crystal clear, but I don't get linear programming. Forget na. If you don't get one concept, why worry? Why scratch your head on that one concept? Look at the other concept. Simple. Okay, yes. Let us continue. We have the fourth decision, which is make or buy or outsourcing. Again, we have two questions on this. Yes, make or buy or outsourcing decision. Again, how do we take a decision if limiting factor is not there? How do we take a decision if limiting factor is there? That is again there. First, let us try to understand the base. Company is trying to take a decision. Yes, there is one component which is required. Should we make it on our own or should we buy from the supplier? Suppose to manufacture a laptop, a mouse is required. We are taking a decision. Should we buy the mouse from a third party or should we manufacture on our own? How do we take a decision? Cost. Based on cost, we will take. Yes. To manufacture, we should incur cost. Buying, what is the cost? Manufacturing, what is the cost? Wherever cost is minimum, that is what we will do. Simple. Yes. So let us look at it with the help of an example. Suppose we are Maruti Suzuki. Okay. So we want tires. For each of our car, we want a tire. So we are thinking, should we buy the tires from Apollo or should we manufacture our own? This is the decision which we want to take. So we'll tell, if we are manufacturing on our own, what is the cost? If we are buying, what is the cost? So firstly, if we are buying from Apollo, what all cost we have to incur? Yes, to purchase, we have to pay them the amount. For every tire, suppose I am paying 5,000 rupees. Again, from there, I need to transport. So for every tire, transportation cost is 500 rupees. So the total cost is 5,500. So if I am buying, the cost is 5,500. Now I see, if I manufacture on my own, what will be my cost? I'm telling, if I manufacture on my own, what all will be the cost? Yes, if I'm manufacturing on my own, yes, the variable cost for one tire is 3,000 rupees. The variable cost for one tire will be 3,000 rupees. Yes, to manufacture the tires, I have to purchase a new machine. Yes or no? Specifically to manufacture tires, I need to purchase a new machine whose depreciation is 10 crore rupees. Yes, 10 crore rupees is the yearly depreciation. In a year, we'll produce 1 lakh tires. So how much is it, students? Yes, 10 crore rupees divided by 1 lakh. Oh, 10 lakh, 1 crore, 10 crore. It is 1000 rupees is the depreciation. It is specific fixed cost. Specifically, if we produce the tires in-house, only then we will incur. Otherwise, we will not incur. That is why it is relevant. Okay, next. Extra rent, 5 crore rupees. If we are producing in-house, to produce the tires, we want a place, right? So we take an extra place on, we have taken an extra place on rent. The rent we are paying is 5 crore. 5 crore is the total for a year for 1 lakh tires. So for one tire, it will come to 500 is the rent. It is a variable cost. This is the specific fixed cost. If we have opportunity cost, that also will include. So what is the cost if we manufacture it in-house? 3,000, 4,000, 4,500. So look at this. If we buy it from Apollo tires, per tire cost will be 5,500. If we manufacture on our own, cost is 4,500. What is the decision, students? What is the decision, students? What is the decision? What should we do? Should we manufacture in-house or should we buy it? Yes, the decision is we manufacture in-house. Simple decision. This is how we take a decision. Okay. Look at this. We have make or buy or outsourcing decision. Yes, again, two possibilities. If there is no limiting factor, if there is limiting factor. If there is no limiting factor, how do we take a decision? We see what is the cost of manufacturing, what is the cost of buying. Wherever cost is minimum, if cost of buying is minimum, we'll tell okay, let us buy. If cost of manufacturing is minimum, we'll tell okay, let us manufacture. Okay, wherever cost is minimum, that is what we are going to do. Cost of manufacturing. What all cost will incur for manufacture? The relevant cost, it is variable cost plus specific fixed cost plus opportunity cost. This is the relevant cost of manufacture. For buying, will incur purchase cost plus if there is any additional cost. Suppose transportation, insurance, okay, all those will be the cost of buying. So we compare wherever cost is minimum. I have told you at the starting. Yes, if you are comparing based on cost, if you have more than one alternative, wherever cost is minimum, that we choose. Okay. Example, same example, Maruti Suzuki, same example, same data is there. Okay, we've already done it, so need not look at this. Okay. Now, second, if limiting factor exists, what do we do if limiting factor? Again, let us try to understand it. Suppose we are telling Maruti Suzuki only. Yes, we are taking a decision whether to manufacture in-house or to manufacture from outside. But now, what is the issue? Yes, labor hours is limited. Yes, so we have altogether 4 functions to produce a car. Firstly, we'll be stamping, that is metal, will be putting it in the exact shape. Next, we'll manufacture the light. Okay, next, the entire cushion, the interior works will manufacture. Next, tires will manufacture. Okay, let us see to manufacture what all cost we are incurring. Okay, yes, we'll give you the data. Look at this. Let us write down the data. To manufacture, okay, in-house, here it is 5,000, here it is 4,000, here it is 8,000, here it is 50. We are buying is 10,000, 6,000, 12,000, 13,000. Yes, which is better, students? Stamping. If we do it in-house, the cost is 5,000. If we get it from a third party, it is 10,000. What is the decision? Yes, the decision is we should be doing it in-house. Yes or no? Again, light manufacture. If we do it in-house, 4,000. Do it from outside, 6,000. Decision is we should be doing it in-house. Thirdly, cushion. In-house is 8,000. Outside is 12,000. Decision is we should be doing it in-house. Yes, tire. If you are manufacturing in-house, 15,000. If you are buying it from outside, 13,000. Decision is we should be buying it from outside. This is the standard decision, yes, which we would have taken if there was no limiting factor. Yes, what we want to do, Maruti is telling, yes, I want to do stamping on my own. I want to manufacture light on my own. I want to manufacture cushion on my own. But I don't have the labor hours. Now, what do I do? Yes. Now I need to see. Yes. Tire anyways, I will give it outside. In this stamping, light, cushion, which one I will manufacture first? Which one I will give priority to? How do we do that? Look at this. Yes, so we'll calculate how much cost can be saved if we manufacture it on our own. I'll tell you, stamping, if we do it on our own, we can save 5,000 rupees. Light manufacture, if we do it on our own, we can save 2,000. Cushion manufacture, if we do it on our own, we can save 4,000. And tire manufacture, if we do it on our own, there is no saving. So this anyways, for tires, anyways, the decision is we will buy. Okay, now how much hours is required? Okay, assume the number of hours is 2 hours for stamping, 4 hours for light, 1 hour for cushion. What will I tell? If I do stamping on my own, I can save 5,000 rupees. And to save 5,000 rupees, I have to work 2 hours. That is, I'll be getting 2,500 per hour. If I manufacture light, I will save 2,000 rupees. To save 2,000, I should be working 4 hours. So per hour, I'll be saving 500 rupees. If I manufacture cushion in-house, I'll be saving 4,000 rupees. To save 4,000, I have to work 1 hour. So per hour, I'll be saving 4,000. So if I have to allocate the resources, first priority, what will be my first priority, students? This will be my first priority. First, maximum cushion. Based on the labor hours, employees will tell maximum cushion you produce. All cushion here only you produce. Light and stamping, if you want, we'll get it from outside. Yes. Next, few more hours is there. We'll tell, yes, stamping also you do here. Yes. Yes. Again, more hours is there. Light manufacturing will also will do here. Again, more hours will there. Will we manufacture tire? No. Tire will tell, we'll get it from outside. This is how decisions are taken if limiting factor is there. Look at this. Normal decision making is simple. We compare cost of manufacture, cost of buying, whichever is cheaper we do. Now, cost of manufacture is cheaper, but still we cannot produce all the units because we have a limiting factor. Now, what we need to do? We need to allocate based on saving per limiting factor. We'll see. Yes, if you are manufacturing, what is the cost? If you are buying, what is the cost? How much cost we are saving by manufacturing for one unit? Based on that, we'll tell if for 1 hour, how much we are saving. For one limiting factor, how much we are saving. Based on that rank, we will allocate the resources. So let us have a look at one question. Limiting factor exists. Firstly, we calculate the savings due to manufacture per unit. It is cost of manufacture minus cost of buying will be the savings due to manufacture. We calculate the savings per limiting factor, give the ranking based on savings per limiting factor. Based on that, we allocate the resource. Resources can be allocated if we manufacture it on our own, but if resources cannot be allocated, yes, we have no option, we will outsource. Clear? However, if savings per unit due to manufacture is negative, that is, if cost of buying is less, what is the decision? We'll tell, let us buy it only. Okay. Now look at this. We have an example. Yes, we have 4 options to produce pencil, pen, highlighter, stapler. All data is given here. Total labor hours is available is only 500 hours. We need to calculate which all products to outsource, which all to produce in. Yes. Firstly, we see, yes, if we produce in-house, what is the cost we will incur? Okay. If we produce in-house, pencil 4 rupees, pen 10 rupees, highlighter 18, stapler 30. If we buy it from outside, what is the cost will it? Now we will see which is better. How much cost we can save. Pencil, if we manufacture it in-house, cost is 4. But if we buy it from outside, cost is 8. So how much cost we can save? 4 rupees. Pen, if we buy it from outside, 15 rupees. If we manufacture 10 rupees, 5 rupees. Highlighter, if you buy it from outside, 28 rupees. If you manufacture in-house, 18 rupees. 10 rupees we can save. Stapler, if I buy it from outside, it is available for 25. But if I manufacture it in-house, 30 rupees. Yes, am I saving anything? No. For stapler, the decision is simple. For stapler, directly I'll tell buy it from outside. Don't look at it at all. But for pen, pencil and highlighter, it is better to manufacture in-house. But I need to see if resources is available. Now I tell, okay, pencil I will save 4 rupees. But to manufacture one pencil, 1 hour is required. That is, for 1 hour, I will save 4. Pen, again, I will save 5 rupees. To manufacture one pen, 1 hour is required. Per hour, I am saving 5 rupees. Highlighter, I will save 10 rupees. But to produce one highlighter, 4 hours is required. So per hour, I am saving 2.5. What is the ranking? First, whatever labor hours is there, first we will tell is produce pen. Next, if more time is there, produce pencil. More time is there, produce highlighter. And stapler, anyways, we are buying from. We are telling total how much hours is there. Total 500 hours is there. First, what will produce? Will produce pen. How much pen is required? Yes, pen. 200 pen is required. For every pen, how many hours is required? 1 hour is required. So first we'll produce 200 pen. 200 pen at the rate 1 hour. Yes, we'll use 200 hours. So 500 out of 500, 200 hours we've used. 300 hours is there. Now pen we have produced. Next we'll tell, let us produce pencil. Yes, 200 pencil is required. For every pencil, again 1 hour. So we will tell, again minus. Pencil will produce 200 pencil will produce at the rate 1 hour. Will take 200 hours. So 100 hours is out of 500 hours, 400 hours we utilize, 100 hours is pending. Third ranking is highlighter. So we'll tell, yes, let us manufacture highlighter. How many highlighter we want? 400 highlighter we want. For one highlighter, 4 hours. Altogether 800 hours we want. Do we have 800 hours? No, only 100 hours is there. So based on 100 hours, how much highlighter we can produce? For one highlighter, I want 4 hours. Yes or no? For one highlighter, I want 4 hours. If I have 100 hours, I'll be in a position to produce 25 highlighter. I'll produce a 25 highlighter, utilize 100. So now, what is the product mix, students? Yes. Pencil, 200 units is required. What decision we have taken? Complete 200 pencils will produce in-house. Will not get it from outside. Pen also 200 units is required. First pen will produce in-house, not buy it from. Highlighter, 200 units is required. 25 highlighter, we can produce it in-house. But for balance 175 highlighter, we should get it from. And stapler, we told it is better to buy it from outside because it is cheaper. Complete 200 stapler, we'll buy it from outside. Is it clear, students? Yes, this is how we do the product mix. Now, qualitative factors which should be considered. Yes, while we are taking a make or buy, should we do it in-house? Should we buy it from outside? If we are getting it from outside, if we are outsourcing, what all risk we have, what all things we need to keep in mind. Firstly, we need to ensure that the goods are of correct quality. Goods we are getting should be of correct quality. That is the first thing. Second, the supplier should be reliable. Yes, we have agreed that he will provide the goods, but he is not giving the goods. Yes, it will cause problems in the future. So the supplier should be reliable. He should be giving the goods at the correct quality at the correct time. Thirdly, what will be the impact on the customer? What will be the impact on the supplier? Yes or no? Whether customer is okay. Customer is telling, no, we want, yes, we want you only to manufacture the goods. Then it will be a problem. So what is the impact on the customer? What is the impact on the supplier? Because yes, we were planning player manufacture on our own. Now, if we are getting it from a third person, what will be the impact on the supplier? And confidentiality of the process. If the product we are producing is such that it is confidential, yes, we are under a threat if we give it to an outside third person. Yes, the threat is he may leak out the confidential process, the trademark, the secret. So in such cases, we should not give it to outside. These are the qualitative factors which be kept in mind in case of make or buy decision. Is it clear, students? Is it fine? We'll do it tomorrow. Okay, I'm fasting now, so it is time to break my fast. So 8:45, 6:45, I need to break my fast. So it's always it's time for me to break my fast. So at least at the time of breaking our fast, I need to be there, right? Okay, so balance portions we'll do it tomorrow. Okay, so it is time for me to break my fast. So whole day we are fasting. We need to go have something at least for ourselves. So we have two questions on this. If you want, you can try it yourself, or else tomorrow we'll do it. Yes, we have two questions. What are the two questions? We have illustration number 5 and test your knowledge question number 11 based on make or buy outsourcing decision. Yes, we'll do that tomorrow. And tomorrow balance concept that we have is continuance or discontinuance of business. That decision also will take. Yes, with that, all the short-term decisions will be over. Next, we'll be having the miscellaneous areas. The miscellaneous areas also will be covering it off tomorrow. Tomorrow morning, we'll finish off all these things. Okay, so we've discussed various short-term decisions. What are the short-term decisions we have looked at, students? Yes, first we have looked at sell or further process. Should we sell it the goods as it is or further process? How do we take a decision? If you further process, how much revenue you get? To further process, how much cost we should incur? Based on that, take a decision. Next one was special price order decision. We look what is the revenue we get from special price order, what is the cost of special price. Yes, non-financial factors. I love apps. Industry analysis, additional terms, buyer credit worthiness, statutory compliance. Next, product mix decisions. Yes, if company produces only one product, wherever total contribution is maximum, that we produce. If it is more than one product, if we have single limiting factor, multiple limiting factor. Multiple limiting factor also, rank is same, rank is different. Rank is same, or if we have single limiting factor, based on contribution per limiting factor, we take a decision. But if rank is different, we need to go for LPP. Okay. And we have make or buy or outsourcing. Yes, if there is no limiting factor, we tell yes, whether cost of manufacture is cheaper, cost of buying is cheaper. Whichever is cheaper, we do that. But if limiting factor is existing, first we see if manufacturing is cheaper or buying is cheaper. If buying is cheaper, we buy. If manufacture is cheaper, yes, we see by how much it is cheaper, how much we can save per unit by manufacturing. Step number one. Second, we calculate the savings per limiting factor. And based on the savings per limiting factor, we allocate the resource. Yes, this is how we do it. Yes, balance things will be done tomorrow. Thank you so much, students. Keep preparing, keep rocking. We will rock our SCMP examinations. Told you, SCMP is not scary. SCMP is scoring. Let us make it scoring together. Thank you so much, students.